All right, today we are going deep inside a high-performance AI trading system called AlphaCore. We're going to look at one of the single most critical days in its history to really understand how this thing thinks, how it adapts, and, well, how it wins. So let's just start with this number because it's pretty staggering. This is the total portfolio growth the AI generated, and it did it in just 18 days. Now, if we want to get really precise about it, that performance comes out to a 247% return on its initial capital. I mean, a result like that, it really makes you stop and ask, right? Is this just some crazy lucky streak, or is there a seriously sophisticated system at play here? Well, let's find out. We're going to dive in by looking at one single pivotal trading day, September 10th, 2025. Trust me, this one day tells us everything we need to know. You know, every great story seems to start with a plan. And on the morning of September 10th, the AI's plan was clear, it was simple, and here's the kicker, it was completely wrong. And this is where you see the central conflict, right? On one side, you've got the AI's cold, hard logic. It saw Tesla close below a critical price and said, okay, that's a sign of weakness. But then you have the messy reality of the pre-market, where the stock was already rallying. So the AI was all set for a drop, but the real world was pointing to a climb. And listen, this wasn't just some casual bet. The system had really high conviction here. It committed a significant 6% of its capital because it was so sure it had spotted a structural breakdown. It was locked and loaded, ready to profit from a fall. But, as we know, the market had other ideas. So what happens when your super high-stakes plan gets completely blown up just minutes before the game starts? Well, for this AI, it's not panic, it's protocol. And this, right here, is where the system really shows you how smart it is. Just look at this timeline. I mean, the speed is incredible. At 8:27 a.m., we're still more than an hour away from the opening bell. It spots the problem. The plan's dead. By 8:45, it has done a complete 180 on its strategy. So by the time that opening bell rings, it's already executing a totally new, bullish plan. And this wasn't just some impulsive change of heart. No, it was a disciplined two-step emergency procedure. The first command, flatten all, is exactly what it sounds like. Get rid of everything bearish right now. But the second one, risk adjust, that shows its intelligence. It recognizes, hey, this situation is uncertain, so it actually pulls back its total risk, reducing its exposure from 13% down to a safer 10%. That's smart risk management on the fly. But how in the world does it make such a complicated decision so fast? I mean, that's the billion-dollar question, isn't it? The answer is in its unique framework. It doesn't see the market as just one thing, but as a whole system of interconnected parts. See, the AI doesn't just stare at one stock. It uses this whole hierarchy of assets to get the full picture. SPY, that's the S&P 500. It's the anchor. It tells the AI the market's main trend. Bitcoin, that's the gatekeeper for risk appetite. The VIX is like its fragility detector, the hedge. And Tesla, that's the amplifier. It's the high-octane engine for catching those big, explosive moves. Each one has a very specific job to do. Okay, so this all leads to something the system calls cask alignment. It's a fancy name, but the idea is actually super simple. Are all four of those assets telling the same story? Before that pivot, when it was bearish on Tesla, the system was only at a 3 out of 4 bullish alignment. SPY, Bitcoin, and the VIX were all pointing up, but Tesla was the odd one out, holding the whole system back from full conviction. And that is exactly why this pivot was so critical. By changing its mind on Tesla, by actually listening to the new data, the AI didn't just dodge a bad trade. It unlocked the potential for a perfect 4 out of 4 bullish signal. And that allowed it to go all in on its new bullish strategy with the absolute highest level of confidence. So the success of this whole thing wasn't just about speed or some clever framework. It was really about a core philosophy the system calls dynamic discipline. And it's a concept that kind of redefines what it even means to be a disciplined trader. What this means is the system's real strength isn't just blindly following rules. It's knowing when and, more importantly, how to adapt them based on what the market is actually doing. So it's disciplined enough to stick to a plan once it's confirmed, but it's flexible enough to ditch that plan the second it's proven wrong. You know, a single phrase from the system's own internal logs just says it all. Strategy flexibility beats stubborn positioning. And on September 10th, that philosophy made all the difference in the world. So what was the final score? The result of this dramatic last-minute pivot? A perfect 100% win rate across all 8 positions it took that day, netting over $544 in profit from a plan that was just hours earlier completely and totally wrong. And it did it all in just 90 minutes of trading, a complete victory born from what could have been a total disaster in less time than it takes to watch a movie. When you step back, this whole case study is more than just one profitable day. It's a really powerful look at adaptive intelligence in action. It almost gives us a blueprint for what high-level decision-making is going to look like. So ultimately, this system's power doesn't come from being some perfect fortune teller. Not at all. It comes from being an expert at adaptation. It's built from the ground up to react intelligently when things get weird, using that multi-asset framework to build conviction, and its philosophy of dynamic discipline to turn a potential catastrophe into a huge win. And that really leaves us with a final thought, doesn't it? I mean, this AI's ability to process conflicting information, ditch a bad idea, manage its risk, and then execute a profitable new plan, all in a matter of minutes, it really challenges our whole idea of what it takes to succeed in these high-stakes environments. It's not just about trading anymore, it's about the future of decision-making itself.